If you're thinking about a career in asset management or you're looking at asset management jobs right now and you're not really sure what the difference is between acquisitions and asset management or property management and asset management, stick around because in this video, we're going to break down exactly what an asset manager does and what you can expect in an asset management role in real estate investing. For first dibs on all new real estate financial modeling and career training videos, make sure to subscribe to the channel and hit the notification bell to be notified every time I release a new video. So if you're thinking about a career in asset management or even just a job as an asset management analyst or associate or an asset manager in general, but you're not really sure what you're going to be expected to do all day, by the end of this video, you'll know exactly what to expect in an asset management role and if that role is going to be right for you. Now, I've asset managed over 1 million square feet of retail property and hundreds of multifamily units. So I've done this across different product types and I've done this over many years and over a large scale. So first, let's define what is real estate asset management in the first place, right? Well, when you boil it down, real estate asset management is really the management of the business plan and overall property performance of a deal. So instead of working on the day-to-day operations and hiring third-party vendors to do things like fixing a roof leak or replacing a garbage disposal, as an asset manager, you're going to be doing things like running the financials and figuring out what happens to your IRR if you sign a lease with a new tenant or if you renew a lease with an existing tenant. So what we're going to do in this video is really break down 5 different things that you're going to be expected to do as an asset management professional and what your responsibilities are going to be for each. So the first is commercial real estate property leasing and negotiation. So in a multifamily property, you're not going to be the one that's responsible for actually doing the leasing at the property. You'll have an on-site property manager that's going to sign leases. So if you have 200, 300, 400 units, it's probably not the best use of the asset manager's time to negotiate these leases. But in commercial deals, you're often signing leases that are very long term, so they might be 5, 7, 10 years or more, and they're also going to make up a larger square footage footprint of the overall property. So these leases matter a lot more, and you need a qualified professional in there to negotiate these leases with lots of times national credit tenants that are going to be sophisticated in their own leasing process as well. Now, number 2 is going to be construction management. So whether you're looking at a multifamily deal or a retail deal, you're likely going to be responsible for managing your general contractor or any sort of construction that's going to go on at the property. Now, this also includes tenant improvements if you're looking at a retail property and the tenant is actually doing those improvements on their own. You'll need to make sure that you're supervising this construction and also making sure that the tenant is doing everything the way that you want it to be done, because ultimately, at the end of the day, you own the property even when that tenant leaves. So you want to make sure that they're doing it right. Number 3 is investor report creation. Now, this really depends on the size of the company. Sometimes portfolio management teams will do a little bit more of this, but for a smaller company and especially for individual investors, asset managers are going to be on the front lines of investor reporting. They're going to know exactly what's going on with the properties, they're going to know the performance of the properties, and they need to be able to package that up to create an investor report, whether it's a quarterly report or an annual report, whatever is expected to be communicated to investors. Asset managers are likely going to be at the forefront of that every quarter or every year, however often you do those reports. Now, number 4 is scenario and hold sell analysis. So real estate investment firms are constantly evaluating if they want to sell their property or hold their property. How do they hit their returns that they promised investors when they first went out and bought their deal or they first went out and raised their fund? So asset managers are constantly running an analysis to figure out when the optimal time is to sell the property and how they can maximize profits for both their firm and also for their individual investors. Now, last but not least, and really at the end of the property hold cycle, number 5 is going to be property disposition oversight. So when you actually go to sell a property and you're going to try to realize your investment returns, the asset manager again is going to be on the forefront of this. So that includes cleaning up the operations of the property before you actually even put the property on the market. So this process will generally start 12 to 18 months before the property is actually being marketed for sale, because buyers are going to be looking at historical operations. So asset managers need to get in there as soon as possible and make sure that the property is operating efficiently, so a next buyer will look at the financials and realize how to maximize the net operating income at the deal and ultimately maximize value. Now, this also involves choosing a broker, getting broker opinion of values, and deciding the team that you want to market the property with. Now, once you've decided on that team, it's also a process to manage that transaction. So you need to choose a buyer, and you also need to manage the transition between your company and the company that is acquiring the property. So as an asset manager, that's really going to be your responsibility to make sure you take care of. Now, as far as career paths are concerned, in asset management, the trajectory is generally pretty straightforward. You might start as an analyst, move up to an associate, then move up to an asset manager level where you're managing 8, 10, 12 properties at a time, and then you may move up to a more supervisory role where you're responsible for more of portfolio management. But it's generally a straightforward process. Now, if you want to get into a role like acquisitions, moving into an asset management role could actually be really helpful to your career. You'll learn a lot about the operations of a property so that when you're actually underwriting deals to acquire deals, you'll have a much better idea of how they're actually going to operate and what your assumptions actually should be based on realistic scenarios that you've worked through as an asset manager. So to wrap this up, remember, portfolio management is really that highest level where you're looking at all properties a company owns and running analysis at more of a high level. Asset management is more of making sure that the business plan is executed on a property by property basis. And then at the property management level, it's really more day-to-day operations, making sure that everything is taken care of from a maintenance perspective, from a leasing perspective when you're looking at a multifamily deal, and other day-to-day operations to make sure that the property is running smoothly. So if you liked this video and found it helpful, make sure to hit that subscribe button, hit the like button also, and share it with anyone who might find this helpful. And I hope to see you in the next video.